Darius from Creative Equity Group, and I'd just like to take a few quick moments to go through the 5 benefits of commercial real estate investing, at least how we see it. I know a lot of this stuff may very well be common sense for many people and be pretty obvious things that we're all aware of, but I still think it important just the same to highlight them and definitely discuss them a little bit further. The first of which is cash flow. And we all know the old saying, cash flow is king. It is a perfect example of one of the benefits of commercial investing. Being able to actually own multiple units under one roof, let's say a 40-unit building, is a lot easier to manage and control and leverage and maintain than 40 individual single-family units. So commercial investing has one of the biggest perks as far as cash flow. Obviously, it's secured with leases, so it's not someone just living in the property and paying when they feel the need to, though every now and then that might happen and that might be cause for eviction or some other ramifications. It is something where there's a tangible document that is holding the tenant to actually fulfilling their obligation of being a renter. The monthly returns are substantially higher than traditional investments. So if we look at stocks, bonds, mutual funds, annuities, insurance policies, even commodities, the cash flow that's generated from commercial rental income definitely eclipses all of that stuff. So it's something that not many things can compare to it. The other big thing is the cash flow. It's constantly being increased. Just because someone is paying $1,000 rent today doesn't mean they're going to be paying the same amount 3 years from now. It's normal, it's expected, and it's kind of par for the course that rental income is going to increase as time goes on. The other big thing, and probably the biggest thing, is the income is generated on a consistent basis. Obviously, all things being as they should, you're going to collect this money every month, whether you're sick, whether you show up for your job or not, whether you are in the US or you're in the Caribbean or you're in Europe or you're in China, doesn't really matter. This money is being generated really from an asset that you've created, which leads us to the second point, appreciation. Now, appreciation, obviously, as we all understand it, is something gaining more value as time goes on. And that's exactly what happens in commercial. If you look at commercial investing compared to other traditional investments, the rate of that appreciation is the best. I mean, nothing can compare to that. So, we all heard the saying, if I bought properties, if I bought 10 of them, 10 years ago, I'd be a millionaire now. That's true every moment in time. If you accumulate these properties today, as time goes on, just the appreciation itself is something that a person can not only live on, but they can build a legacy behind. The other big thing is as that appreciation is happening, you are building equity. So it's almost like having this incredible self-generating bank account that is constantly growing even without you doing much to it. Forced appreciation is another version of increasing value in a property, and it's in quotes because force, all that means is you're doing some physical labor to the property to enhance the value. Maybe you are changing the flooring and you can charge more rent. Maybe you are improving the heating system or putting a HVAC system in there that's allowing you to charge a little bit more. Maybe you're fixing up the yard, you're adding value to the property from physical labor, or you could do it from basically pushing paper, maybe subdividing a plot of land or converting a 20-unit building into a 30-unit. So there are a lot of creative ways of being able to do that, but appreciation, again, is one of the biggest pluses of doing commercial investing. The third is equity. Now, obviously, equity is that value that is being built into the property in the form of ownership. It is basically money in the bank that is constantly accumulating value. Now, with equity, we all understand exactly what that is. It can be leverage. It's a great tool. you can use that equity to possibly go and open up a business or use that as some form of leverage, which we're going to talk about next. But that equity driven model is so important behind actually building a commercial business itself. It's also this idea that you are investing in a tangible hard asset. It's something that you can touch. It's something that you can hold if you can fit your arms around the property. But it's something that you can touch it. There's a physical aspect to it. So much of investing nowadays is happening through a computer system with something that you really lack control of. Let's take a stock, for instance. All that a stock is really perceived value in a property kind of put into some quantitative format. It's a clever way of saying you really don't know what it is that you have, and whatever that value is that you believe you have is really volatile. It's hinging on so many things outside of your control. Your only real control with stocks is when to buy, when to sell, and how much. And that's really it. So owning a property, again, the old rules apply, food, water, shelter. We're always going to have a need to live in a property. And in other videos, you're going to see what the current state is right now in the world of commercial. What do other investors that have been investing for 10, 20, 30, 50 years, what's their opinion of this market? And what are some ways that you can actually get in and gain your fair share of it without having to go to the bank and get a seven-figure loan, or pull all the money out of your savings or retirement to go buy a property? So the fourth thing is that of leverage. Leverage is really important because a lot of people that are becoming a commercial investor are using that as a hedge against uncontrolled market conditions. Just like we said before, a lot of people that were relying on a 401k or what they thought was a golden ticket in the form of a stock, once the market fell apart, those things they disappeared. I think it's something like 77% of people that had a 401k saw some reduction, some form of reduction during the fallout. Many of those people to this day have not recovered from that. So by owning an actual property, not only is it a hedge against other investments or things that are outside of your control, it's also a hedge against inflation, things devaluing. And being able to leverage one property, whether it's in the form of equity, it's in the form of value, and being able to use that to purchase another property, kind of piggybacking up off of your last or previous investment, is very common within commercial. The way commercial lending actually works, and we'll talk about this in another video, is great because it's the actual asset, it's the property that's being scrutinized before the individual. Now, years ago, you could obtain financing pretty easily without you having to give a PG, which is acting as a personal guarantor or personal guarantee. You were able to do that. Nowadays, you as an individual will definitely be scrutinized somewhat, but the property itself is going to be the primary thing of focus. So number 5, tax benefits. Obviously, it's an incredible tax shelter. There are a lot of ways of being able to defer taxes from other things by rolling that profit into property ownership. Being able to leverage an IRA, which traditionally prior to the age of retirement, you as a person cannot benefit financially from that IRA. You can leverage it and make choices of what to do with it, but that profit basically needs to go back into that IRA and can be realized at the point of retirement. A 1031 exchange is another great creative way of being able to leverage different tax codes and being able to defer taxes too, especially capital gains. If you are a business owner and you have large chunks of change coming in, or maybe you're doing some other form of aggressive investing and again, large sums of money are coming in, capital gains is probably something that you normally do battle with or your accountant does. Well, being able to take that capital and put it into, or reposition it rather, into commercial is a great way of being able to avoid or defer that. Mortgage interest and depreciation deductions also factor in. And obviously, doing commercial real estate is probably, in my personal opinion, the best vehicle for retirement. All of the things we just listed previously are exactly why it probably is the best way to retire. And of course, who doesn't like bonuses? I think the pride factor does play a role. Being able to say that I own something, being able to feel comfortable with where you are in life, knowing that you have a performing asset that you can constantly rely upon is extremely important. And commercial, no matter what people say about real estate and what can happen in the market and things, depreciating and foreclosures and recession, historically speaking, real estate is always appreciating and it holds its value really better than anything else out there. There are some bumps and lumps along the road like anything else, but if you stay the course, you're going to realize anything you might lose from a little decline in the market or even a steep decline. A lot of people that lost value in their properties during the fallout, they've recovered that value and their property is worth more now than it was when they previously bought it. The other big thing about commercial is you're not limited to location. Unlike doing traditional residential, where the majority of investments that someone is doing are in their own backyard, with commercial, it's very common that you may live in New York or New Jersey and be investing in a building that's in, let's say, DC or California or Texas. It is a national way of being able to have more reach. And the other big thing, too, is the control over the property, the maintenance over the property. It's very common where there is a management company that you're working with that is handling collections is kind of a strong word, but collecting rent, also maintaining the property, upkeeping the property, assisting in improving the property, and speeding up any forms of appreciation. Also, it's a transitionary field. And what I mean by that is in another video, you're going to actually see where we highlight what the ideal person looks like that's working with us in Creative Equity Group, that's actually serving as an investor and is looking to get a good return on their money. A lot of these people that are getting into commercial are doing so because they want to get out of whatever is making them money today, which is usually a job or a business, and they want some way to transition out of that. In order to transition out in a safe way that makes sense, they need to be able to replace their existing income. Well, commercial is a perfect way of doing that because it's not going to require a lot of time. If you're out there investing yourself, you're looking at maybe 10, 20 hours a week max. If you're working with a company like ours, Creative Equity Group, your time every week is basically zero. Maybe 10 minutes you spend throughout the week looking at the appreciation or performance of your investment. But other than that, there's no time that you have to put into it. And that leads me to the final part, freedom and flexibility. Once you own commercial property, or you are part owner, or you're involved in the investment behind that, the ability to travel, to make choices, to have freedom of time and function as well. How you plan to use that time. There's really no ceiling on it, and it's limitless. And actually owning a property, a hard asset that's constantly appreciating as you're building equity with strong cash flow behind it. These are just a few out of probably countless reasons why someone should be getting involved in commercial. I know if you're watching this and you've been paying attention to what we've been doing here in the company, this is all, second nature to you. You knew this before you watch this video. You probably didn't need this video to even teach you that. But I think it's important that people have this stuff refreshed in their mind and are constantly motivated to get involved in commercial. And of course, here at our company, Creative Equity Group, this is exactly what we do. We work with people who have some assets or some capital that they want to put into the marketplace within commercial, of course, but they really don't want to deal with the hammers and the toilet bowls and the looking of the property and the analysis and dealing with tenants and all of the mess that goes with real estate. They just don't have the time for it. They don't have the fortitude for it. It's just not what they want to do. But they want to take advantage of the financial upside of actually investing in real estate. And this goes for even outside of commercial. A lot of what we do is commercial, but we also do have residential offerings. I really recommend that you go to the website, which is right there, creativeequitygroup.com. If you haven't already signed up for a free account, which allows you to gain access and actually see the nitty-gritty details of certain offerings that we have, I really suggest you do so. And at the very least, maybe give us a call here in the office, send us an email, or fill out a quick form on our site, which takes maybe 30 seconds at most, and we will gladly have a conversation, let you know what we can do to help you out in actually growing this business. And we really look forward to being able to work together and see what can happen. And please do go through the other videos we have. We created them so we can offer value and content to you and just educate you about what the options are out there and, of course, what the options are here at the company Creative Equity Group. Thank you very much. I appreciate your time, and I look forward to speaking with you soon. Take care.